Hello, traders. Nick Shaheen here looking at Doordash. The reported earnings today, or overnight, I should say, and they're having a party. They're having a big party. So here's how we traded in the last. Actually, the question: do I chase it here or not? If it was me, I would wait out this candle. First of all, I hate buying when everybody else is ahead of me, even at the expense of letting it go without reason. So I'll share those levels that I would be looking for. But first, let me give you a little bit of background. I was bullish the stock when everybody hated it. I thought that it has a legitimate chance at sustaining the bump it got from 2020. So the 2020 pandemic highlighted the need for such a service, and now it's up to them to keep the baton with and run. So the revenue, which is this top line sales, basically is at a run rate of almost 3 billion, from like 10 times from what it was a couple of years ago. So what will it be 2021 and out? Can they maintain this? And if so, then everything else below in the P&L will fix itself. So yes, this is a stock to own for the long term, even if it's expensive. And at that, it's not expensive. It's like 13 times sales, which is about half as expensive as Tesla, to give you an idea. Just more expensive than Facebook and company. Okay, having said that, let's talk charts. In, I won't say around the 13th or 10th of April, I went long and shared it with the members. The link to that chat room is down below in the description if you want to join us. It's not free to be in there. We do a lot of hard work, but it is free to try it out for 10 days. The doorway is through PayPal, but $0 for 10 days, and then you can cancel. I need to know that it's a real person, not a troll coming to disrupt everything. So went long. It paid right away. And usually when I go long, I share it in four ways. I share two ways of buying upside hope: calls or call spreads, of course, shares, or sell some puts and put spreads where I don't need a rally. Those are still working fine. The calls or call spreads delivered profits right away, but then if somebody sat on them, they didn't book profits, then those profits disappeared. So this bump doesn't bring them back. But it hit our target. I had drawings and I deleted them earlier this morning. And this was the upside target. The trigger was down here, and this was a stop out level because I don't know what's below here. And that's part of the message today, just in case. Okay. So let me back up a little bit and say that every stock we have, regardless of the story it has to trade within the whole collective of the market. This week, the market got wobbly based on something that's going to be ongoing. Inflation. It's not going away. Everything is freaking more expensive. So the Fed's going to be under more pressure to ignore their job. So now their job is twofold: create some jobs and control inflation. Well, last jobs report was disappointing. That's why the markets rallied. The job before that, the jobs report was 1 million. The market rallied. I don't think they would rally again. So if the jobs report comes back to being strong and the inflation continues to be strong, the Fed will be under pressure to start talking about tapering earlier than 2023. And all they have to say, one of them says, we may have to taper just before 2023, like we said we would. And the whole narrative changes. Anyway, that's not here yet, but I have to look out for it. That's why I don't want to exuberantly just blindly jump in after a 25% rally. Okay, so here are the lines. I'll explain to them. I just drew this box. I looked at this chart earlier today, and this candle jumped up like a sore thumb. And it's one day on March 5th. That was a bad day in the market. You remember that? The Nasdaq was falling out of bed, but that was the day they bottomed. So that day, they loved it. They went to 170 almost. They hated it. They went to 135, 138 almost. And then they came back and closed it exactly where they were. So they had a whole bunch of indecision on this doji candle there. So I drew a box around and I just extended it. And we're right in the middle of it. So this is an area where I can kind of say it's limits of sorts. There's interest down here. There's hate up here. And either of those two should be support and resistance. And they do come close to current levels of support and resistance, so I'm good with that. I drew the resistance, which is the actual resistance. This one would be a trigger to chase after it's delivered broken. So the onus is on the bulls to overcome the resistance on the first try. Maybe they fail, they come back and break it out. That's how you develop some sort of a cup and handle, or at least a neckline that goes by way of the bulls. So but before we zoom in on tighter time frames, the big picture is, if you look at this, it's a descending channel. It's got lower highs, it's got lower lows, but it's kind of a wedge now because the lower lows are flatter than the lower highs. So the bulls are taking the fight to the upper ends of the descending channel. Onus is on them. They have to prove they can get out. That's why I don't want to chase going into the upper edge of this trend line. I don't believe in breakout of trend lines as much as I do breakout of levels. I'll give you an example. So this is the breakout of the trend line, will happen somewhere around here. In this case, it's pretty close to this level. I would trust this level first. So I think there'd be sellers in this level and sellers in this level here. So if they take out the sellers, I trust it more than taking out a stinking trend line, because I can draw the trend line from here, or I can draw it from up there and it'll be a lot sharper. Which one do I believe? You know, just connecting two dots doesn't make a breakout. So if I do this, the trend line was here, and somebody chased it, they got faked out big time. So where do I draw the trend line? Is it here or here? You know what I mean? Like, is it these 2 points or these 2 points? So you can move it wherever you want to. So you start seeing what you want to see, rather one that's there. This is there. There's no denying about it. That's a tick they failed at before. That's a tick they failed at before. So I trust them more than the trend line. All right, having said that, let's zoom in. Let me zoom in 2 hours and reset the chart. All right, so this is every candle is a couple of hours, so for a day or so. You can see it's going into a line that I had said it was resistance, and there are 3 candles up here that kind of verify that, and it was in play before. So I trust it. I trust they would find sellers. Now, if the markets continue rallying like this on Monday, of course, this will have a tailwind. I'm willing to forego it. How about that? If I'm not long anywhere down here, I'm already too late for the short term. Long term, it's a different story. I can start building a position. Even then, I hate doing it on a plus 25% day. It's just against my DNA. Okay, so shorter time frame for more active traders. If somebody traded intraday, they can get more information from shorter candles. I think 15 minutes is probably necessary here to get smarter. So on the 15-minute basis, I see this little dome up here that's a master fail with like a whole bunch of stuff. So I should expect a lot of resistance in here. And look, this is that blue box. It's the top end of the blue box we drew. And so I should pay attention. This level, this little jaunt. So every previous weird action just gets highlights here. Like, why did it happen before? It might happen again. So a little too late to be jumping in intraday, unless I'm in it for the super long term. And even then, I don't go all in because what I said of the macro. So they have to trade within the whole market. What if the market is actually wobbly? You say, oh, we just had a huge correction. Did we? Let me show you something. Well, some like Fire Marshal Bill. Let me show you something. Does this look like a correction? That's the S&P. That's all-time high. Is this a correction? That's not even a start of a correction. It's just one red candle among a whole bunch of greens. It's not a correction. It's just one red candle, one tough week, and not that tough either. So keep perspective. 10% drop would be somewhere in here. 20% drop would be somewhere in here. Where do you think Doordash will go if it has a 10% drop? Oh, it's not going to fall 10%. You don't know that. I don't know that. I know we are extended. This is proof that we are extended based on what's been going on. Here's what's been going on. This is above and beyond of what's been going on. Red and blue is a simple linear regression line. So when you say reverting to the mean, somewhere in the middle lies the truth. Reverting to the mean, this is reverting to the mean, which would be not bearish. It would be the bulls reloading to get even higher. That's how it goes. So before I jump into all the other great stock opportunities that are falling into support, and I have over 30 of them in my inbox waiting for me, I have to consider the fact that the whole index might be tired. So unless we're having a major rotation with whatever was leading the S&P up here and whatever was dropping the NASDAQ down to its support levels, I have a disconnect there. So what's going to happen? Rotation from other stuff into the NASDAQ so those support levels hold, or the support level give way and then whoosh, the S&P really corrects down to 400. There's a gap down here, by the way, too, to 388. That number sticks to mind. And 378 also sticks to mind. Anyway, these are things you have to consider when going into individual stocks. That's why I'm saying, if I like the Doordash, I shouldn't go all in because it could fall through no fault of its own. All right, Nick signing out. Seriously, if you do like this stuff, we debate this all day, every day, live in the chat room, even on the weekends. Weekly webinars, live, the chart,